Stocks fall for the first time in 5 trading days. Citigroup leading financial shares lower after earlier unveiling a plan to sell shares to repay government bailout money. Now, for more details, let's go to Deborah Kostroun at the NYSE. Deborah?
Thanks a lot, Pim. Yes, and stocks retreating ahead of tomorrow's Fed decision on interest rates. Many traders talked about some profit taking ahead of that Fed decision. However, economists are expecting the Fed to keep interest rates at historic lows. But we did get some reports showing bigger than expected growth in industrial production and wholesale inflation, and that spurred some concern that the economic recovery may be prompting the Federal Reserve a little bit further down the road to reduce their stimulus measures that have so far, of course, caused stocks and commodities to rally. And the dollar, of course, has weakened amid these low interest rates that we've been seeing. But in fact, today, a little bit of movement that we saw with the dollar actually rallying to the highest level in more than 2 months. And the movement in the dollar, of course, always has an impact on those commodities. Crude oil ended its longest losing streak since 2001 and gained for the first time in 10 days after that increase in industrial production signaled that fuel demand will increase. Traders saying the increase in industrial production is definitely a sign that the economy is improving, and that should lead to higher demand for oil and energy. Those energy stocks, the only gainers in the S&P as a group. Material stocks lower and gold prices falling in New York as the higher dollar attracting more buyers. You saw material stocks lower a lot, also a lot of those gold stocks lower as well. But financials, as Pim was talking about, the biggest drags on the market on concern that all the talk about the share sales that are going on right now, also the future interest rate increases and credit card delinquencies will weigh on earnings at the lenders. Citigroup dropping once again after saying that they're going to sell a little more than $20 billion of equity and debt to pay back those government bailout funds. And then we also got a lot of news from the credit card issuers. JP Morgan saying their net credit card losses rose to 8.8% in November, and that was up from their October numbers. That's it from here at the New York Stock Exchange. Pim, now back to you.
Thank you very much, Deborah Kostroun.